So you've got your homeowner's insurance policy and you're wondering if they're going to pay for a specific claim, let alone should you file that claim. So today we're going to talk about the different situations where insurance won't pay, where they will pay, and what you should do, whether you should or shouldn't file a claim. Let's just start off with the most common. Most people are frustrated with home insurance because they're not paying your claim. You've already filed a claim, you're frustrated, you're angry, I get it. That part is very frustrating because a lot of people don't understand the little details that really screw you at the end of the day. That's why having the right agent makes all the difference with insurance. Car insurance as well, more so home insurance, because everybody's used to, I have car insurance, it's great, yada, yada, yada. I learned a few things, maybe I don't know anything. And eventually they buy a home. And they're like, well, the car insurance worked out. They paid every claim I've ever had. They've been good. They've given me all the rental car and towing and all that other stuff. But now that I'm a homeowner, I can't file these claims? What do you mean? This is why I bought homeowners insurance, was to protect myself. Well, here's the thing. There are tons and tons of endorsements. And what an endorsement is an addition, an add-on to your policy. Because unlike car insurance where they cover almost every single situation, your homeowner's insurance doesn't cover a lot of situations. And they do that on purpose to protect themselves from a lot of risks. There's additional cost to have extra water coverage, to have extra jewelry amounts, to have extra furs and paintings and all that stuff. So in order to do that, you have to add what's called an endorsement or a rider, or the third way that people call it is an inland marine. It's a coverage for your personal belongings that is in addition. So there's several different pieces, and I'm actually going to make a video in the future that actually goes into some of the exact specific pieces. We'll talk about a few of them today, but if you guys want to learn all of them, subscribe, hit the bell icon so when that video goes live, you'll be the first one to know. So your home policy is getting denied. The first question is you've got to look at what's called the DEC page, the declaration page. That page is the list of everything that's covered and everything that's excluded on your policy. Some of them are very confusing because they don't always list everything. They put a little asterisk next to it, and then you got to find it on page 54 or page 23. And then it's not descriptive, and then you got to call the agent, and at the end of the day, it becomes a really big headache. This is where some of the insurance companies really get a bad rap. If all of these companies added all these extra benefits, your average house policy, which is $1,200 today in the US, would be $1,800 and $2,800 per year. And there's no way you would buy that because there's this other guy offering $1,200. If you have 10 people offering $1,200, not telling you about everything, and you have 3 people offering you an $1,800 policy, you're not going to question what is the biggest difference, because there's 10 of them. If these guys on average are saying, yes, do this, and a couple of them say no, you're going to default to the ones that average out the best. And that's one of the negatives or the downfalls. So let's get through it. Water backup, typically not covered unless you add it. There's some pump and water backup overflow. Some companies don't cover contents in those situations. You got to read the fine print. Now the thing about it is sometimes they offer these extra like warranties and cover breakage of your electronics and all that stuff. You got to keep in mind these may raise your rates later if you file them. So let's go into how do we get that covered? What is the first things that we need to look at? Yes, we need to look at what our policy talks about and all the coverages we have, what's excluded. Now, if you were told on a phone call, most agents are required or do record their phone calls for what we call errors and omissions to protect themselves. So that way you can't be like, well, I told you this and I told you that, but you never did it. At the end of the day, you signed that paper. So you're at a loss there if you've signed the home paperwork. If you haven't, you've got a really strong leg to stand on. So go back, find the paperwork, make sure you signed it or e-signed it. If you did, let's dig in a little bit further. What you need to do is you need to find out when you called them and try to have them pull those calls and listen to those. If you're dealing with an agent, the cool part about that is they're not normally directly impacted by the company. Do agents lose money if you file a bunch of claims? Yes. If they have a whole bunch of people that file a whole bunch of claims, they can lose money at the end of the year, which is like a bonus for them. If they go too high of a loss ratio. Whether they're exclusive agents or independent agents won't make a huge difference. If they have a high loss ratio, those extra bonuses that they count on will go away. So is there a small chance that they're going to rip you off? There is. Most of them don't, though. I'm going to tell you, every time I've seen it, if they've made the error, they have insurance. They actually purchase what's called E&O insurance. That's errors and omissions. That way, if they tell you something and it's incorrect, or they told you were covered but forgot to change it, they can still cover it under that errors and omission policy. Then they lose a little bit of money because they made a mistake, but they don't lose their whole bonus at the end of the year. First thing is, try to keep it civil. Talk to the agent, make sure you remind them what happened when you called. If it's a 1-800 number, they're gonna take time, pull those calls, wait the day or 2 days for them to find it and listen to it, and then they can even send you a copy if need be. It's a lot harder to get that copy because they really like to hold that tight just to be safe, but at the end of the day, they have to adhere to the ethics. And if you got someone that's unethical, I can't help you. There's no fixing unethical people. That's just the way they are. I'd be interested to find out below, if you guys want to put a comment, have you had a situation of that where an ethical person explained that it was their mistake and it was covered? If you can't get a hold of the agent, or you're having problems with them, or you just don't like the agent, typically each insurance company has a 1-800 number. So if they won't let you talk to a manager, then you're going to look up 1-800 Allstate, 1-800 Progressive, 1-800 State Auto. They can always reassign you to another agent or agency. That way they keep you as a customer and you're happy. Now, going into the typical things that insurance companies don't cover. Some of the most common things, and these are things that I typically add onto a policy when I quote it. Now, if the price is way too high, we're going to go over it and explain it a lot more in depth, because I need you to understand why my price was higher. If you chose to take them off, that's up to you at the end of the day. But at least I can tell you what the most common things are, and then you can either avoid them or take that risk. Water backup. Water backup, typically $5,000 is what people do. I even fall in that boat sometimes, because that's that price range where it's not that much expensive. So if I saved you a few $100s, I can put it back into water backup and you'll be okay with that. But the problem is that $5,000 really isn't enough. If you had a water claim, a pipe burst, and didn't know about it for 2 days, and it flooded your basement, you're talking at least $10,000 to $15,000 worth of backup. Now, that's where people take that risk. They don't want to pay the extra $60 to $70 a year to have that extra $5,000 backup. I do, because I've actually had 2 water claims in the past, so I know how much of a benefit that is to me. That's also the number one claim that insurance companies get. The next one is personal contents. Always, always, always make sure that you have full replacement cost on your contents. You want to make sure that everything's 100% covered up to today's value. Camera gear, guns, jewelry, furs, paintings, all of these things, anything that has a higher value than $1,500, you should think about whether you should or shouldn't add it on as something called scheduled property. Talk to your agent about this item. If it is, you may have coverage, because some companies allow you to go higher than that. You might have $2,500, not likely. But if you don't have this coverage, then you need to schedule it. So for example, I have pretty nice camera gear. I've got my camera, I've got my computer, I've got other cameras upstairs. So I've got a few $100s worth of camera gear, maybe a couple $1,000s. So I increased my camera gear. My kids have a computer. I have 2 computers. I've got a laptop. My wife has a laptop. So we're all tech friendly, right? But if I lost any of that stuff, no matter how old it is, whether it runs slow or fast, to replace those things with today's equivalent is going to cost me thousands and thousands of dollars. Most computer equipment maxes out at $2,500, but per item, it's usually $1,000 or $1,500. There's a secret to this. So the thing is, you don't always have to schedule it, especially with rings. Rings are the pain in the butt, because you always have to label it. Has to be clear-cut diamond. It's got 3 diamonds. It's got the silver gold in it. It's got this. It's got that. It's got all this stuff, and you have to list this on a piece of paper. And then every 3 years, you have to go into the jeweler, say, look at my ring, please appraise it, and then hand it back to your insurance. So that's a pain. There's a way around that. You can do what's called a blanket coverage, and it's just like it sounds like. If you were to cover yourself with a blanket, anything that falls underneath that blanket is going to be covered. Most companies will let you do 50,000, 25,000, 10,000, even $5,000 blanket coverage. So for me, what I did is I did about a $5,000 computer coverage because I'm thinking, okay, I got my 3 daughters, got mine, got my wife, so on and so forth. At the end of the day, I don't have to list every individual item. Now with paintings and anything that has a collectible value, I would probably schedule those separately. That way that those pieces show their individual value. You may have the hassle of having them appraised every so often, but at least you know if something does happen, it's literally stated. It's this painting by this person in this type of color. It's authenticated. It's got this value. If the fire happens, they know that that painting is gone. That way you're not having to explain it and fight for it. Where the blanket is a little bit of a trust thing, where now they're like, okay, did you really have that painting? Did you really have that? And it's a little bit of a hassle. Almost every time it's covered either way, so I wouldn't worry too much about it. So are your items covered? Absolutely. Just be very careful that when you do these coverages that you read them and learn about them. If you're not familiar with home coverages, like I said, I'm actually working on a video about that, so subscribe, hit the bell icon. But also I'm going to put a couple videos up here. The Home 101s, they're about 15 to 20 minutes long, but they're very in-depth on certain coverages that you should have when you have home insurance. I'm Mark Flockhart with Think Insurance. I will see you in the next one.